Citigroup announced their earnings today, and I wanted to go through the earnings announcement, update my analysis on Citigroup, and share with you where I think the stock should be valued. I'm a current Citigroup stockholder, and I'll be making a decision whether I should buy more shares, just hold my shares, or sell my shares. Let me take you through the announcement and give you the highlights and maybe some troubled areas that I saw in the earnings. First, revenue grew real nicely. That's always a positive, especially in the fourth quarter. The profitability grew really well. The earnings per share number actually exceeded what I was expecting. That's always good. And it grew real well. I'll show the percentages a little later. The book value also expanded really well. And banks, you need to value using book value as well as earnings per share. And the book value expansion is always a really good sign that the bank is adding value for shareholders. So earnings per share expanding, book value expanding. Those are the primary highlights of what the bank reported. And that's what I believe is driving the stock price today, which is up. In the fourth quarter, revenues grew by 12%. That's really good. This is a big bank. So it's good to see them growing. And their book value grew by 3%. Very good book value growth. Now, let me get into my valuation of this bank. I think Citigroup is discounted by 26%. If I look at the stock price that it closed on yesterday, because the pre-market price is probably a little higher, but it's 26% discount on yesterday's price. And I get there by looking at the book value and trying to project where that book value is going to be in the future, looking at the book value, the growth that we've seen in the book value, and then trying to project it into the future and getting a book value target of that stock price. I also look at earnings per share, project those earnings per share again, forecast them out, and try to project where the earnings per share will be in the future. I take an average PE for banks that I got through online, and then I combine those two values to get to a fair price on the stock today. That would be $92.39, and the current stock price is $73.50. As you can see, there's a lot involved when I look at a bank, a lot of numbers, a lot of financial statements. And if you're a member of the community, I would be happy to share this data with you if you'd like to take a look at it in detail. So I shared with you what I think of the stock and what my price target is. Now let's see what the market thinks. So far, so good in the pre-market. The stock is up 5%. The company is going to host their earnings call, and the CEO and CFO will answer questions in about 2 hours from now. And at that time, they may guide, and that guidance may really affect the stock price. So it's nice to see that the stock price is up, but it could really change if the CEO or CFO guide with a pessimistic outlook. Now, the market cap of the company is 139 billion. It is a major bank, but it's probably one of the smaller major banks, and the revenue is 69 billion. Their forward PE for 2025 is really good at 10.8. So I think there's an opportunity for this stock to really grow into the average PE, which would be 14. Dividend is real nice at 3%. And the stock has done well for the past year. It's up 39.68%. So it's been a winner for a year. It looks like it's really set up well for 2025. The price targets from analyst 8.75, and all these are pre the announcement. The announcement was quite favorable, as I showed, 12% revenue growth, earnings per share expanding, book value expanding. So I imagine analysts are going to warm up to those numbers and probably increase their price targets. My price target is 26% discount. So I'm more favorable than analysts in this case. The banking industry is very different than other businesses. They don't manufacture anything. They're not a software company that writes code and sells it to customers. They're a bank. They basically, in principle, have depositors that primarily deposit their cash, and then the bank will use that cash to make loans, make investments, and the net interest margin is how they make money. Very different than a typical business. Therefore, when I look at a bank, I'm really abandon what I use for a typical business and really put my mind around the banking industry. For these guys, for the trailing 12 months, and this doesn't include today's announcement, they have been growing their revenues. You can see that they're much larger than they've been in the past. Their net interest margin is very important, and they've had ups and downs, which is somewhat typical with banks. As you see interest rates fluctuate, that number will fluctuate as well. When I invested in this bank, it was a little bit of a bounce back story, and I'm glad I bought the stock. It's up from the price that I acquired it, and it's paid that dividend too. And it's a matter of really understanding which bank is a good investment. I was a JP Morgan investor for a long time. I was glad I invested in JP Morgan, but that stock got a little too expensive. So I left JP Morgan and decided to buy Citigroup in 2024. The revenue has been, in general, expanding, but we've had some red on the screen. And again, the fourth quarter was really good. With higher interest rates, I think they're going to be able to make loans with a higher interest rate implied in them, so they'll be able to make more revenue. That's real good. So those are the big items that I'll show on the income statement. Now let's take a look at the forecast, what analysts are thinking. 14 analysts cover Citi. I'm a little surprised that more analysts don't cover it, but maybe banks are a little too boring. And these guys are collectively saying that the stock is discounted by 8.75, and it's done really well for a year. So all those things to me are positives. The best price target from one analyst is $102 per share. The worst, 64. So the worst case scenario isn't too bad. As we look at the forecast for this bank, they're expected to grow their revenues, low single digit. They are a big bank. The revenues are real high. And they're going to really expand their earnings per share. And I think that's why the forward PE drops, is that they continue to expand their earnings per share, which is really impressive. If you look at 26 at $9.21, that's really good. So that's really setting up the stock to have a good prolonged rally. As we enter the Trump administration, it's expected that there's going to be less regulation and it's going to be easier to do business. So I think that banks like Citigroup are going to benefit from that change. A lot of the viewers of my channel really are interested in dividends. Let me cover dividends. They pay a 3% dividend and they can afford that dividend. They're doing well. And they also buy back shares. So when you add the buyback and the dividend rate, you're up to almost 4%. It'd be a double winner in my book if it could appreciate in 2025 and pay that 4% collective shareholder yield. That'd be real good. So I am favorable on the earnings that were announced for the fourth quarter of 2024 and for the full year of 2024. And I'm going to continue to buy shares into Citigroup. I'm going to dollar cost average an investment of additional shares in Citigroup, just grow that position. I think it's a really good bank. And I know that they had trouble in the past, but it's not about having a bank that's going to be perfect for 20 years. It's a matter of buying at the right time and then watching my investment go up in value. So that's my intent with Citigroup. I hope you found the video interesting. Would love to hear your thoughts on Citigroup, as well as the banking industry, where you think it's going to go in 2025. Keep in mind, I'm not recommending you buy, hold, or sell Citigroup. I'm just sharing my comments as an individual investor. I hope you found it interesting. Thank you for watching.